Welcome to our live session today with Fedros. So, what's up in the FX market?
Well, the euro has been moving in a downward trajectory given that economic data stemming from Germany's industrial output, despite coming in higher than expected, coming in higher than the previous level, which was negative, it did not reach the expected figure. Hence, despite improving, it has not improved as much, which may be weighing on the common currency, hence moving it in a downward trajectory. The pound has been moving in a downward trajectory given the UK's Halifax house prices coming in much lower than expected. The negative figure was last seen in December 2012. Now, this could mean that the British pound, the British housing economy, may be experiencing high pressures from either inflationary pressures or high interest rates. Hence, the turning negative and coming in lower than expected as well is, higher than expected at minus 1% compared to the minus 0.9%, means that there seem to be some fundamental issues in the UK economy. Moving on, the Aussie is on the up and up given the RBA's interest rate decision yesterday to surprisingly hike by 25 basis points, yet it appears to have found support given that China's import data actually improved, whereas their export and trade balance actually declined. Now, given that the Chinese imports actually increased, that may mean that demand for Australian goods has increased, given its reliance on China for its exports, hence providing some support for Aussie traders as it continues its ascent from yesterday's surprise interest rate decision. Moving on, the dollar against the Japanese yen is moving in a downward trajectory as statements coming from the BOJ governor appear that the change in monetary policy may be coming at a faster pace than was previously anticipated, potentially hinting that we may gain some indication at the BOJ's next meeting as to how this may progress. Hence, the Japanese yen is appreciating against the US dollar. Now, the highlight of the day most likely is the dollar against the Turkish lira. The Turkish lira is currently in a downward trajectory. So the dollar gaining on the lira is like a rocket ship at this point in time. It appears that the Central Bank of Turkey has run out of net FX reserves to protect, quote unquote, the currency. Hence, it's allowed the dollar to gain and gain and gain against the Turkish lira. And if I'm not mistaken, it's currently testing the $23 mark. Should it break that, it may most likely go even higher. So this is interesting given that there was some sort of indication last Friday that President Tayyip Erdogan may have been willing to return to orthodox economic policies. However, that appears to not be the case as of now. Yet, many market analysts are expecting that this will not be sustainable for much longer, hence forcing, in a sense, the government to return to a more orthodox way of conducting economic policy. And lastly, in the forex market, the dollar against the CAD has been moving in a downward trajectory, potentially some strengthening by the CAD given its interest rate decision, which is due today, with market analysts being on the edge on whether or not the bank will pause or whether or not they will hike. Now, the interesting part was that the housing prices for Canada actually came in much lower than expected at minus 18.8%, which appeared to be validated by Canada's PMI figures. Now, the bank's sole purpose is to fight inflation, yet one cannot simply neglect that the economy appears to be moving in a more of a negative fashion, I would say, in terms of perhaps reduced economic growth and economic activity. Hence, the bank may see this as an early sign that interest rate policy is beginning to take place. Hence, they may remain on pause to gain some more information, or they may hike to get ahead of potentially increasing inflationary pressures.
And how has gold's price been reacting?
Gold's price appears to be moving in a sideways fashion. Now, it's the same old story where there's fears of a recession, and since those have not been diminished, given that financial releases stemming appear that the global economy as a whole, so from the Eurozone, the USA, and the Asian region, appear to be deteriorating. So, for example, the US employment report on Friday indicated an increase in unemployment, Canada's deterioration, as was mentioned before, the UK's Halifax prices coming in negative, and the Eurozone's, as was noted prior, was Germany's industrial output coming in, despite higher than previously, lower than expected, which would make sense given that Germany is in a technical recession at this point in time. So gold has been moving in a sideways fashion.
How about US stock markets?
The S&P is slightly up, but when I say slightly, I mean barely up. So it could even be said that it's moving in a sideways motion along with the Nasdaq. It appears that for the Nasdaq, the steam from the AI hype and potentially Apple's hype due to the release of the augmented reality, virtual reality headset yesterday appears to be losing steam, and the market may be due for a correction. However, we note that the Dow Jones has continued its downward trajectory, stemming from the ISM non-manufacturing figures from Tuesday, and is moving a downward trajectory.
And how about oil prices?
Well, oil prices, surprisingly, the USA's EIA report came out saying that there may have been a reduced demand. So it's moving in a downward trajectory as there's fears of an economic recession across the world. Hence, a reduction in demand means less demand for oil. Hence, an increase in supply would push prices lower.
And what's in today's calendar?
Well, in today's calendar, we would highlight that Vice President De Guindos is due to speak, and the Canada's Bank of Canada's rate decision, which, as we said before, is a 50-50 possibility of pausing or hiking by 25 basis points. Their trade balance is due earlier than the interest rate decision, which may provide some indication. And during tomorrow's early Asian session, Japan's GDP. Japan's GDP will most likely be very interesting for yen traders, considering statements made by the BOJ governor recently and a report by Reuters on Friday that the government may be looking to change policy, and the fact that the BOJ government feels the need to continually express the risks of quickly moving away from their ultra-loose monetary policy may be an indication that perhaps the GDP figures may not be as optimistic as they had hoped. However, should they come in as expected at 1.9%, we may see the rhetoric dying down and the yen losing ground to the US dollar, as there is a reduced need for switching away from the ultra-loose monetary policy.
Thank you, Fedoros. Stay tuned for our next live session with Fedoros.
Hello, and welcome back to another technical analysis. Now, as we said before, we're going to be looking at the dollar against the Turkish lira. So I've taken the liberty and set up already S1, S2, and S3. Now, these could be broken within a single trading session, just because they have perhaps some space between them does not mean that they're going to be able to withstand a change in economic policy should that happen yet. It's unlikely at this point in time, given that President Tayyip Erdogan was elected with his current economic policy. There is no imminent need for him to quickly change his unorthodox economic policies, despite trying to hint last Friday that they may be willing to consider that. It appears that that is not the case, as the Turkish central bank has removed another layer of protection for the currency. It would appear that there's nothing in the way that's standing between the dollar and the Turkish lira simply moving higher. So the first level of resistance that we would place would be at the $23 mark, point 20, which could be broken as we're doing our technical analysis. Now, what would be interesting would be the next resistance level. So we've got 971 pips. So we're going to reflect the bullish candle upwards. 24.15. And then immediately I place the next resistance at R3 at 25. 25 big figure. So we've got a 23,200. $20, 24, 24 big figure, and the $25 big figure. Now, I do not expect R1 to hold. In all honesty, I expect break above, perhaps testing R2, and then retracing lower for a slow market correction. Probably going to be slightly. Now, the problem is, one might say, is that the RSI indicator at the bottom of our chart is well above the reading of 70. It's actually nearing 100. So very, very, very bullish sentiment within the market, as you can see. Yet being close to 100 may mean that it is due for a small market correction. Maybe. Possible, perhaps to S1 at 21.51 before moving higher once again. For a bearish outlook, for the pair, it would be breaking S1 and breaking S2. It's a very volatile pair, so by breaking S1 does not necessarily mean that it's going to break S2. So for a bearish outlook, breaking both and breaking perhaps even S3, which S3 could be even placed at this point here. 1950. Just for it to have some space for price action to fluctuate in between. Or should it break S3, then yes, I would have a bearish outlook. But for the bullish outlook, I expect it to continue breaking R1 within the next 2 4-hour candlesticks, perhaps, moving towards R2, and then the next potential target, excuse me, at R3. Now moving into the 30-minute chart, you can see it's well above 70, currently testing R1. 15-minute time frame, same picture. All indications for a move higher on the daily is just essentially a rocket ship. Nothing much can be said. So currently we hold a bullish outlook for the pair. So moving on, we're going to be placing some emphasis on the loonie given the bank's interest rate decision. As you can see, our S1 and R1 levels from a previous session are still here. They're still being validated with the exception of S1, which was broken. Now, given the breaking of S1, we now hold a bearish outlook for the pair. Now, this is partially due to CAD OIS implying a 50-50 possibility of the bank hiking or pausing interest rates. However, the fact that it dropped and the possibility for hiking has increased has strengthened the Canadian dollar in relation to the US dollar. So we're going to be bringing R1 at the 1.33,435 level. Moving lower. Let's bring our R2 lower. given this big move, I would not be surprised to see another one forming after the interest rate decision. So there's two possibilities. Either we could bring R2 at this level here, validation of resistance previously as well, and recently. So our R2 could be here, or it could be placed slightly higher at the 1.3565 level. Personally, let's see the space in between the two, 126 pips compared to 94 pips. I'm going to stick to the initial resistance 2 level, 1.3530. And then we're going to be bringing R3 lower, 1.3660. Perhaps it could be brought slightly lower, 1.3635. So this would be my R3. Now note that there is more or less the same amount of a gap, I would say, between each resistance line. Personally, I think that the bank may remain on hold. Recent data stemming from Canada suggests that the economy may not be as resilient as they may anticipate. We're also editing our S1, bringing it lower to accommodate the move lower as well. So personally, perhaps 1.3370. S2 and S3 will remain as they were before. So given now that we have a narrower range between S1 and S2, for a bullish outlook, I would like to see the break below S1 and the testing of support at S2, not simply a break below. Why? Because the distance between the two has narrowed. It's about 56 pips, which could be easily broken within a trading session. Hence, for a bullish outlook, we would like to see the testing of support at S2 having broken below S1. For a bearish outlook, break above R1 and the move towards R2. However, we note once again the RSI indicator below our chart, which shows a reading which is running along the reading of 30, implying a bearish sentiment within the market. As you can see, it's just simply running along. It hasn't broken below 30. Still, the failure to move towards 50 implies that there is a strong bearish sentiment remaining within the market. As you can see, running along 30, slightly moving towards 50, yet not breaking above or moving closer. So we maintain a bearish outlook for the pair. Now, Euro USD, as you can see, the sideways moving channel that we had formed yesterday has yet to be tested. Selling yesterday, we're going to maintain our sideways moving bias from yesterday. There is no need for us to change our support and resistance levels. They seem to be validated as of now. So as you can see, it's remaining within the channel that we had mentioned yesterday. Mid-range of the Bollinger Bands and the Bollinger Bands have narrowed as well, remaining to run along the reading of 50. Hence, we maintain a neutral outlook for the pair. Despite the lower than expected financial releases from Germany, it seems to have not significantly weighed on the pair. So we maintain a neutral outlook as long as it remains within the boundaries of the channel that we had defined yesterday. Whereas for a bullish outlook, break above R1 and move towards R2. Whereas for a bearish outlook, move below S1 and move towards S2. However, it would be interesting to see on the 30-minute chart how this is playing out. As you can see on the 30-minute chart, it seems to be moving nicely in between our channel. Narrowing, not moving above, not moving below. 15-minute channel as well. 1 hour. Even on the daily. So we maintain a neutral outlook for the pair. Moving on. Since during today's Asian session, China's imports came in much better than expected. We can see the increase in the Australian dollar stemming from yesterday's surprise RBA interest rate decision hike. So as you can see, it's broken above our R1 level. It's testing R2. So it's been validated. R2, in my opinion, is validated as it's currently testing and finding some resistance. So we can see how this bullish candlestick right on the dot of our R2 failed to break above and is currently testing once again. So this for me is a validation of the resistance 2 that we drew yesterday. S1 for me will now become S2. R1 resistance turns support. And S2 now becomes S3. R2 now becomes R1. And I'm seeing the formation of an upwards moving trend line, which we will note in our chart in just a second. So we're taking from the lowest point, touching, and continues to be validated. So let's place our R3. So my R3 level would come at about here. I'm seeing a lot of movement and full bodies, candlestick bodies. 0.687, well, I'm taking it slightly higher, 0.66880. So now we also have R3. Maintain a bullish outlook for the pair, given the fact that the RSI is running along the figure of 70, implying a strong bullish sentiment within the market. And for our bullish outlook to continue, break above R1, validating the upper trend line as well, not breaking below, and a move towards R2. Whereas for a bearish outlook, break below the upwards moving trend line, move towards S1, if not also breaking S1, and then moving towards S2. So this is the Aussie. As we can see, the cable is staying between the channels that were predefined by support and resistance. So one could say that this is also the formation of a sideways moving channel. Yet, given the fact that it's not being retested at this point here, the channel is not yet verified. As you can see, it's validating the upwards moving trend line, which was formed on the 25th. On the 25th of May, and we maintain a it would be hard to maintain a bullish outlook despite the validation of the upwards moving trend line. We're seeing that the Bollinger Bands appear to be narrowing. Now, should it fail to break above R1, then yes, I would move into a sideways bias, given that the RSI indicator is also at 50, implying a neutral sentiment within the market. So given these two, failing to break above R1 and staying in between R1 and S1, then moving sideways. But for a sideways motion, it would need to break below the upwards moving trend line. So this right here is a neutral outlook for me, yet the sideways moving channel has yet to be validated. So should it break above R1, then we'll maintain a bullish outlook for the pair, whereas a break below S1 would be a bearish outlook for the pair, as it would break below the upwards moving trend line, and then potential move for S2. Gold appears to be moving in a sideways fashion. As you can see, our previous support and resistance lines have held up from the sideways moving channel that we had noticed previously. As you can see, validated once again here. So R1, R2, and R3 remain the same. S1, S2, and S3 will also remain the same. So we currently hold a neutral outlook for gold, as the RSI figures at 50, and failing once and twice to break below S1 seems to validate our hypothesis. The dollar as a whole on the daily appears to have gained yesterday, but appears to be perhaps weakening today. Looking at the US equities markets, we see R1 being validated, failing to break above again. Despite this temporary upwards movement, we would not bring R2 lower. So personally, my S1 may be brought higher. $33,190. Is the Dow Jones, which is perhaps losing momentum, which could move lower. R1 remains the same. R2 and R3 will also stay as they were. Let's move into a lower time frame, 30 minutes. Narrowing of the Bollinger Bands on a 30-minute time frame. Reduced market volatility, perhaps in a sideways motion. Yet, on the 4-hour chart, it broke below. At this point, here, broke below the reading of 70, potentially implying a shift in market sentiment from a bullish outlook to a more neutral and perhaps bearish. Now, moving on to the S&P 500. Our support and resistance lines will most likely stay as is, as we had mentioned yesterday. No reason to change them as they seem to be validated. Perhaps moving in an upwards fashion as it's running along the reading of 70 on the RSI figure. Yet for a bearish outlook, it will have to break below S1 and move towards S2. And then the next target would be S3. Whereas for a bullish outlook, breaking above R1 and a move towards R2. Our support and resistance levels continue to be validated. Hence, there's no need for us to adjust them. Staying as is from yesterday. breaking below the upwards moving trend line, appears to be now perhaps going in a sideways fashion. Now, this is slightly interesting. As you can see, it's moving towards 50. And the narrowing of the Bollinger Bands, less market volatility, perhaps in a sideways fashion between S1 and R1. However, as we've mentioned, it needs to test R1 and fail to break above for us to have this sideways moving channel, which is at R1 and S1. Otherwise, for a bullish outlook, break above R1 and move towards R2. Whereas for a bearish outlook, breaking below S1 and S2, and then a move towards S3. As this could also mean that it may be switching from a bullish outlook to a bearish outlook. Personally, though, the Nasdaq feels that it's overbought, means that there's too much hype from Nvidia and Apple, hence it may be due for a market correction in the near future. Oil, once again, our levels remain the same. It appears that it slightly weakened yesterday, slightly on the up and up today, perhaps a small market correction, bouncing off the 50 RSI once and twice, may mean that there is a switching outlook. Yet the reduced perception of demand for oil may weaken the commodity even further. Hence, I would currently maintain a bullish outlook, having bounced twice from 50, perhaps moving higher, yet fundamentally, we expect oil to move lower. You can see, and lastly, let's do Apple, the 4-hour chart. For our daily support, 177.50. This would be my S1. S2 being placed at 173.75. Now, given the recent market moves, this is why there's a difference. One might say perhaps could be closer, yet if you can see this bearish candlestick, that means this could easily be broken. So this will be my S2 and then S3. Right here, 166.50. There's a pretty wide gap between S2 and S3. Now, this is because I feel that should it break S1, it will most likely break S2 as well and move towards S3. Whereas for our support and resistance, for our resistance line, right here, 184. This would be my first level of resistance. Now we need to move further back. Stock split occurred. So for R2, $190.65. And then R3, 198.45. So this would be R1, R2, R3, and S1, S2, S3. Personally, I feel that Apple's augmented reality, virtual reality headset is overpriced, as I had stated yesterday. So this was not a surprise for me, given that in all likeliness it's possible for a market correction. Yet note that it broke below 70, peaked up and broke below and is moving towards 50, implying the potential for a reversal in market sentiment. Hence, breaking below S1 and moving towards S2, which I think is viable, and then moving towards S3. But for a bearish outlook, it would need to break S2, in my own personal opinion. For a bullish outlook, break above R1 and then move towards R2. Excuse me. And that's most likely it for today. Let's just take a quick look back at the USD CAD or the Loonie. So in fact, maybe the Euro. But the Loonie is breaking below. Let's move into the 15-minute time frame. Breaking below S1 and move towards S2. It is possible. I would not form a downwards moving trend line just yet. Perhaps should it move slightly lower, then perhaps we could form a downwards moving channel. But that's it for today. Thanks for watching, and until next time.
Okay, all right, guys, welcome to another IronFX exclusive webinar. So yeah, today we'll be on the TDI trading strategy. So yeah, I got to read the disclaimer first before I begin. So the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So the material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained. So redistribution of this material is strictly prohibited. So welcome Christina, welcome Peter, welcome Ruben, welcome Didiero, welcome Steven, welcome, Thomas. So where are you guys from? Where are you guys from, may I ask? Okay, you are from Germany. Wow, nice, nice. That's a place I want to visit one day. So I haven't had the time to go to Europe yet. Oh, Netherlands. Wow, all of you guys are in the European side. So how's your trading week been? How's everyone trading week been? Any trades? Any trades taken? Namibia, where's that? Let me check it out on Google. Namibia. Oh, it's a country in Southern Africa. Nice, nice. All right. Anybody has taken any trades so far this week? Taken any sells, taken any buys? Or Christina, you have not taken any trades as you are still learning as a beginner. How long have you been trading? A few gold trades. Wow, nice. Did you buy or sell, Steven? Okay, let me load the layouts first. Oh, both. Okay, you're scalping both ways. Nice. You are against trend and with the trend. Oh, okay. Still learning. What kind of trading strategies do you guys use? So by the way, if you actually have a strategy that is working well for you, please do not change your strategy just because you watch this webinar or watch another webinar teaching you a new type of trading style. Please continue using the strategy that works well for you. Oh, Christina, for 4 months you were taking trading signals but were no good. So learning now for myself. Well, it's very, very normal. So when I first started trading, it's very normal to take signals. I will not fault you guys for it. When I first started trading, I also used a lot of trading signals, even paid for premium signals on Telegram. So it's normal that traders like us start with signals, since most of the time we just want to make money. So last time I actually paid for signals, followed others trading gold, lost a lot of money. So it's part of the learning process. So once you have gotten the taking signals, trading with signals out of the way, the real learning can begin now. Okay. So let us begin. So just a quick recap. So this entire week I've taken, I think, 5 trades. So today I've taken a trade on USD CAD and USD JPY. So USD CAD, you guys can see on the 5-minute chart. So we have a high here that was just taken out, the previous high right there. So that was my original take profit target. So if you draw a line across, that was my take profit target. Take profit moving on towards the 1 minute. So price was around here earlier on. So when price went up around here, wait, let me draw things out. So I actually drew a line across. You actually see that price took out the previous low. So at this point in time, I'll write liquidity taken out. Liquidity taken due to relative equal lows. So I'm actually using smart money concepts. Just showing you guys a quick recap before we can begin the topic that we are going through today. So relative equal lows, what I'm looking at, it's candles of, as mentioned, relative equal lows. So the candle was taken out, price got taken out, and then I saw that price went down, shot back up very, very strongly. So at this point, I actually thought I could take a buy already. So I entered using a Fibonacci line, drawing a fib from the bottom of here to the top. I was looking to enter on the retracements. So if you actually draw a line across, there is a nice little tiny overlap support area. Okay, let me just draw the line across. There's a nice overlap support. So this was the support line that I was looking at. Support line. I was trying to enter right there. So I took a long position there. Upon the retest, my stop loss was below the previous swing low. So all the way down, have a relatively safe stop loss. Most of the time, price would not actually hit my stop loss. So I was actually risking 13 pips for my trade. So I was actually aiming higher, aiming higher, somewhere up on the daily chart. The take profit was higher. But because I had to do some work in office, I actually closed out my trades early. So I closed out my trade early, netted only about 8.4 pips before I close everything out. So yeah, that's the only trade I've taken on USD CAD. So the next trade, although the risk to reward is negative, but hey, profit is profit, pips is pips. As long as we take profit, we cannot complain. So showing you guys another trade that I took just now earlier, USD JPY. So if you notice that price actually went down, you take a look at this entire swing. It swung all the way up. So obviously when you see such a big move up, you always expect a retracement back down. So what did I do? I actually draw a Fibonacci line from the bottom of this low towards the high right there. So if you draw a Fib bottom to the top, then you realize that I was looking that price actually tapped into the 78.6% Fibonacci ratio. So price continued going down. So I was always looking for some kind of strong momentum like this, strong momentum pushing back up. So a strong momentum reversing back up can indicate that price has reversed, possibly indicating a shift to bullish market structure. So what happened? Price tapped into 78.6. Let me clear things out to make it cleaner for you guys to see. So tap into 78.6, price went down, and then suddenly shot back up very, very strongly. So what did I do? The moment I saw price break, I tried to enter on the next tiny overlap support area. So we have a nice little overlap support. The overlap support was listed right here. So I took a long entry, long position, entered right at that overlap support, stop loss below that recent low, also risking 13 pips, and I aimed for price to head towards the upside. So this was my final take profit target, the previous swing high. So I noticed for USD JPY, normally when price actually consolidates, if you actually notice a pattern, let me get the take profit line is not there. So if you actually notice that price went up towards the take profit target, which is the previous swing high, immediately rejected back down. That is the reason why I close my trade always at the next high. So that's a trade I've taken. So it netted me about 24 pips. So next, let me show you guys the IronFX YouTube channel. So webinars like this should be streamed and uploaded to YouTube. So it's under IronFX. Feel free to subscribe to this YouTube channel. Hey, hi there, Daihiru Dande. I think you left. Okay, I think you left. Okay, you're still here. So, hey, good morning to you. Your name is Remain an Ordinary Dahiru Dandere from Sokoto State, Nigeria. All right. So yeah, welcome to this webinar. So if you want to find out more free webinars like this, you can head on towards the IronFX website. So IronFX website, it's at this link right here. So I'll send the link to the chat. You can check the website out. So you can go under IronFX School. Okay, let me retry. IronFX School. Okay, wait. IronFX School under webinars. So it should be listed as popular. Click on it. I'll send the link over to the chat once again. You scroll down. You can actually view our educators that will teach you guys trading strategies. They are Forex instructors. So we have, okay, my image is not here yet. Okay, I haven't introduced myself. So some of you guys have already seen me before. Let me find the webinar part. Okay, so you can see here. So on this page, you can actually notice that we have the TDI trading strategy right here. So the next one, it's live trading strategy on February 23rd, which is tomorrow. So today, I'll be going through the TDI trading strategy. So without further ado, let us begin. Okay. Wait, let me clear things out. Okay. So my name is Chen Yongjing, and I'm the trade analyst for Everest Fortune Group. So Everest Fortune Group is actually the finalist for the best Forex research for 2019, 2020, and 2021. So we are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a special collaboration with IronFX where we are bringing you guys the good stuff, the juicy stuff, and the best trading education that you guys can have. So next, so the first part of this webinar will be held by me. The second part of this webinar will be held by Sarah. So that's her. Later, you guys will be seeing her for the next half. I'll go through half of it. She'll go through the next half of it. Okay. So agenda. It means a few topics to cover for today. What is the Traders Dynamic Index? How does it work? The TDI trading strategy. How can we improve on the strategy? So if you guys want, you guys can actually screenshot it down. So if I'm going too fast, I'm talking too fast, or I'm talking too slow, feel free to let me know in the chat so I can slow down or speed up. So yeah, by the way, any questions you guys have, just ask in the chat immediately. As soon as you can, type it out, ask away. Because if you wait until the end of the webinar, we might not have time to actually answer you guys' questions. So what is the Traders Dynamic Index? So it's actually quite a nifty indicator. So it's actually a combination of three popular indicators all at once. Relative Strength Index, the RSI. I'm sure most of you beginner traders has already used the RSI before. So, and also the moving average, MA, I'm sure you guys have already used it, touch it, on MetaTrader 4, MetaTrader 5, when you open it, it should have the MA or the RSI. We also have something called the Bollinger Bands together with it, so made up of three indicators. So the Traders Dynamic Index is a trend following indicator. Let me write it down. Trend following indicator. So it actually helps traders to identify entry and exit points in the market. So it's actually based on the current market conditions. So the TDI consists of two lines, the red line, which is I'll write it down, red line, which is the TDI's signal line. We also have the green line, which is the TDI's indicator line. So this is signal. This is indicator. After I write down, you guys please screenshot this down before I continue. So the indicator line is calculated by subtracting the RSI value from the moving average of the price. So the signal line is a smoothed version of the indicator line. So one of the main advantages of the TDI is that it can be used on any time frame and any market, whether it be stocks, Forex, or commodities. The TDI is highly customizable, allowing you to adjust the sensitivity of the indicator based on your personal preference and trading styles. So the TDI can also be used to identify trends as well as overbought, oversold conditions, RSI. So when the green line crosses above the red line, let me show you. Green line crosses above the red line. Maybe there's a slide for it later on. So when the green line crosses above the red line, let me get this out. Okay, it is a bullish signal. So indicating a potential long position. So when the green line actually crosses below the red line, it is a bearish signal, indicating a potential short position. So TDI can also be used to identify divergence. So divergence, we have bullish divergence, we have bearish divergence. So later we will have some examples of the charts. We will show you guys how to make use of the TDI indicator. So the TDI also uses Bollinger Bands in its calculation by taking the difference between the upper and lower bands and plotting it on the TDI indicator line. So the calculation provides a measure of the volatility in the market, and the TDI uses this information to help identify potential entry and exit points. So let me just move on. Okay, please screenshot this down before we continue. Give me a moment. All right, so we are back. So RSI, it shows the strength, volatility of the market. It indicates if the current price is overbought or oversold. So you got to know green line is the fast, red line is the signal line. Please screenshot this down also before we continue. I'll just be going through this slide fast. We'll be going through the examples very, very soon. All right, once you guys have screenshotted it down, let's move on. So the Bollinger Bands is actually used to estimate the oscillation of the trading channel. So it looks like a rubber band. It looks like a very, very big range, a big channel that is forever moving with price. So key zones to define market reversals, 68. Anything above 68, overbought. Anything below 32 is oversold. Please screenshot this down. It's very, very important. It's a key concept to make use of the TDI indicator. All right, once you guys have screenshotted it down, let us move on. So this is how the TDI indicator looks like. You guys can actually go on to TradingView, you search TDI indicator. So when you click on it, add it to your chart, it should show as TDI GM. So looking at the TDI indicator, we still don't know how to use it. So this is a Bollinger Band. This entire huge channel, this red channel, this green channel that is moving along, that's the Bollinger Band. So as mentioned, the green line is the fast line, the red line is the signal line. So green line is to smoothen things out. Red line is the signal line. So you can see here an example. So how does it work? How does it work? So for short term, this is for short term. I'll just highlight it out. So a buy signal. So when the green line, just take it as the green line, crosses the signal red line from below. Note this down. There's a very, very big difference. So a sell signal is when the fast green line crosses the signal red line from above. So just take note, this is a short-term trading signal. So crosses occurs very often. So stronger signals if it crosses in the Overbought, oversold zone. Where's the overbought zone? At 68. Oversold zone at 32 region. Please screenshot this down before we continue because we are moving on to the live examples next. So just remember 68 overbought, 32 oversold. Or if you guys find it difficult to remember, take it as overbought as 70, oversold as 30. So you just round it up to the nearest whole number. Okay, next. Taking a look at the TDI trading strategy. How does it work? You notice that at this specific crossover right there, indicated by the blue circle, you notice that the red line has crossed the green line from below. So if you actually look up, once it crossed over, price became a buy signal. So price continued moving bullish for the short term. Okay, Peter, you are using MetaTrader 4. How can you put TDI on your screen? So you can actually download the TDI indicator MT4. So it should have been on the marketplace. Okay, let me find it. Give me a moment. MT4. Okay, maybe you can download it from this website. There are many websites you can find it online. Many TDI indicators, you actually search YouTube. There's a how to add TDI indicator to MT4 or MT5. So feel free to check it out. So maybe this link, is it free? Yup, you can check that link out. Okay, so somebody actually asked a good question. Doesn't it lag behind? So definitely it does lag behind. Every indicator lags behind. If you notice, if you draw a line all the way up, the sell has already happened 1 or 2 candles behind. So in this specific situation, the red line has crossed over the green line from above, indicating a sell signal. So it's more or less lagging indicator. It feels like a MACD indicator. MACD is also lagging behind. So notice right here, sometimes it doesn't lag behind. Notice right here, the red candle has crossed over once again above the green candle. So connecting it up here, price has started to move bullish in the short term. So next, looking at the top, you notice that price has went into the 70, above 70. Notice right here, above 70. What does it mean? Above 70 means it's overbought. So with the price above the overbought area, let me get my pen out. Overbought area, we have the red line crossing below the green line from above. So if you actually draw a line up all the way up, you notice that the crossover happened. You guys can actually take a sell for the short term. Sell until, where do we close out the trade? Sell until price starts to cross over once again. So when price crosses the red line once again, you guys can close out the trade, use it as enter and exit points. Okay, any questions so far? If you guys do not understand anything, feel free to let me know. So I'll clear the chat, erase all ink. You can actually screenshot this down. It's very, very clean now. Okay, maybe I draw a circle where the crossover happened. You guys feel free to screenshot it down. So what's the best time frame to use it? Well, you can actually use it on the 1 minute, 5 minutes, 15 minutes time frame. So personally, if you want a stronger crossover, likely you can use a larger time frame like the 1 hour time frame, because most of the time the smaller time frames such as the 5 minutes, 1 minute chart does not hold much strength. So yeah, once you guys have screenshotted it down, Let me continue. So next we have the crossing of the red and orange lines. So after I explain this, screenshot it down. It's very, very important. So this is for longer term trading signal. So for buy signal, the red line crosses the orange line from below. So longer term buy. So this a sell signal. The red line crosses the orange line from above. So there's a very, very big difference. Instead of playing around with the red line and the green line, right now we're actually using the red line and the orange line. Okay, please screenshot this down before we continue. Next, I'll be showing you examples of how the longer term trading signal actually works. Right, next. Take a look now. The red line, I'm talking about the first blue circle right there. The red line crosses above the orange line from below. So right there, longer term trading signal price actually start to move higher and higher. So what happens next? We are looking for a short, a sell signal right here. The red line crosses below the orange line from above. So it's right here, and price started to move bearish. Another example right there. The red line crosses above the orange line from below. So it's also right here, indicating that the market has turned bullish. So another one, the red line has crossed below the orange line. So it's around right here. We actually have a short. So this time frame is likely on the 15 minutes time frame, 1 hour time frame. You guys can check it out. So feel free to screenshot it down. Let me take my eraser. I'll clear this out first so it will be cleaner. Feel free to screenshot it down, this down, before we move on. The next video. All right. Once you guys have screenshot it down, I would like to welcome my next analyst, my colleague. So her name is Sarah. I think I've shown you guys her at the start of the webinar. So this is her. She'll be coming to take over now. Okay, let me move on to this slide. Okay. She'll be taking over now. Please welcome her. Any questions you guys do not know, please feel free to ask her.
Hi everyone, my name is Sarah. So now I will taking over by my colleague Yunjin's part. Okay, so let's do the next half webinar by me. So now let's take a look at the orange line across 32, 15, and 16.8 levels. So actually, this is quite a rare long-term trading signal because when the red line is when the orange line across level from below is giving us the signal that to buy, or when the orange line across the level from above is giving us the signal to sell it. Okay, maybe you guys can take a screenshot on this. So this one just is the orange line is whether above or below or crossing it and to buy or to sell. But actually this is quite rare, and this one is in more longer term trading signal. It's not for like a short term trader. Okay, so next one. Okay, so now let's take a look at an example first. So you can see when the when the orange line across the level, level from below, you can see the orange line across the level from below. No, this you can see the point that we circle in blue is the orange line across it from above is sell. Okay, so this sell means you enter in sell here and you are looking for take profit in longer term. Okay, so means you are looking, maybe you sell here. Sorry, let me use my pen. Okay, so maybe you sell here and you are looking for take profit in the future. Okay, so this one is more for long-term investor. So let's make it clear first. This signal is for long-term investor because you see the price actually, if you sell here, is up a little bit. Okay, then bounce it, then up a little bit. Then finally it is going down. So if you are a long-term trader and you are intend to hold your trade for like maybe more than one month or like a few months, this is the signal that for you to enter it. Same as here, you can see the orange line is crossing the level. You see, this is the level. It's crossing the level here. So it give me us the word from above. So giving us the signal to sell it. So we can sell it here, and while our take profit is all the way to here. Okay, so which is another long-term sell. Because you see, actually, if you sell it here, the price actually bounces towards the resistance first, then down to the support. So same as these things, you can see the orange line is crossing the 13 level, which is this level, from above. It's giving us the signal to sell it. So actually this one, you can see the price is up first. So in long term, the price will drop it, but just not as recently. So far, clear? So now let's take a look at next examples. What is all the index trading strategy? So how are we going to apply all the indicator, all the index to add on our trading strategy and to make our trading strategy more profitable? Okay, so TDI uses several classical indicators at once. So just now my colleague has mentioned, Yongjin has mentioned it, is about RSI, MI, and Bollinger Bands. So the best to use TDI is to use it within trend and support and resistance, and also stop loss. So this all the trend support and resistance is giving you a more clear of targets. When is your stop loss? Where is your stop loss? And where is your take profit? Okay, so now let's look at this example first. So just now, my Yongjin has mentioned it, like which line cross which line, then giving us the signal to buy, giving us the signal to sell it. So let's look it at one by one. Before you're looking at the signal first, okay, we may always draw it up all the support and resistance. As you can see, this one first support, which one is the overlap support at price of 1.08856. And the second support is at recent swing low is at 1.0311. The first resistance here is at 1.14849. So now I'm thinking about when is the correct timing that I'm entering the trade and how I'm going to, where is my position? Is there a long position or is there a short position? So let's take a look at maybe here. As you can see, maybe let's look at this point. You can see the right line is crossing the orange line from below. So it's at this place, it's giving us the signal to what? To buy it. Okay, so imagine like we buy it here, then we may put our take profit towards the first support. Okay, or like we may put it higher to the first resistance. So as you can see, it's a very nice trade if you are entering using this signal. And maybe we take another example at here. So you can see the green line is across the right from below, which giving us the signal to buy or to short. The green line across the red from below. Okay, so actually this one giving us the signal to buy it. But you can say, because the price now is at what? It's out our resistance here. So maybe we may think about it. Maybe for me, if I enter in the trade using this indicator, I may not enter in because I need to think about it. It's not at the first resistance. I feel it's a bit dangerous. So you see, when we are using the indicator combining with the resistance and support, it's more easier for us to make profit because this indicator is useful, but you cannot use it solely on the signal when you enter in the trade. Okay, so maybe we take a look at this one. So you can see this one is the orange line crossing. Sorry, there is no level. So maybe we can see the green line is across the red from below. Green line is across the red from below. So it gives us the signal to buy it. And it's just near the first support. Okay, so maybe we think, oh, it's a very good place to buy it. So maybe my take profit may be somewhere at first resistance. And my stop loss may put at the recent swing low. Okay, so this is a very nice trick that if you're following the signal and also you're following the support and resistance. So there are a lot of cross and different people seeing the graph in different ways. I cannot like show you guys all the cross. So maybe I will try to demo more on different thing, or maybe we can see this one. When you see the right orange line is crossing the level, you see the orange line is crossing this level, is crossing 15 level. So actually for the indicator, it gives us the signal to the orange line crossing the 15 level, crossing the 15 level from below. So it's giving us the signal to buy. So which means we can enter in the trade here, okay? So maybe our take profit will put towards the first resistance and our stop loss will just put it at first support. Okay, so let's go to next example. Okay, here is another example. Same thing. Let's find out the first resistance, first support, or like second resistance, second support. Because this one, I want to give you guys a more clear explanation. So that's why I just using one resistance and support. So you can see here. The orange line, sorry, it's not orange line, it's the red line. Crossing the orange line from below, okay, you can see here, it's giving us the signal to buy it. So we can buy from here and take profit towards the first resistance. Or we may also see this one as a green line across the red from below. Okay, green line across the red from below. is also giving us the signal to buy. Okay, so you can see actually all indicators sometimes just add more confluence to our buyers, whether we should long it or short it. So let's take a look at this one. So the red line, so the green line across the red line from below. So actually this one giving us the signal to what? To buy it. But let's take a look at the graph chart here. So actually here at the price is somewhere this level. So for me, I feel a little bit insecure because it's in between the first resistance and first support. I need a further signal to give me. Then means I cannot only rely on this signal. So I will not enter in the trade here. As I will say, okay, if I really enter in the trade for buy, then I lose it. I lose the trade. Or maybe we take an example as, or maybe we take the example as this one. So orange across the level below, orange line across the 30, this one I think is 39 level. So it's giving us a signal to what? To buy it, right? So maybe we can buy from here and our take profit is towards the first resistance, but actually it did not hit the first resistance. So these are all the signals that give me and whether I should enter in the trade, how I'm entering the trade, should I long it, should I short it? Okay, so now let's talking about how to improving on the strategy. Means how are we going to combining with all the indicators to improving our strategy? So firstly, we can use the index with Fibonacci retracement. So we can use all these index together with Fibonacci retracement or first support and second support. First support and first resistance to see is that the correct level or is that the best level for us to enter in the trade. So imagine take this as an example. We can see here the green line. No, sorry, it's here. The green line is crossing the red line from the green line is crossing the red line from below. So imagine we take a look at this one. The green line is crossing the red line from below, which gives us the signal to what? To buy. Okay, so now I take a look at this graph here. So now I take a look at graph here because the price is at the first resistance. So it should not, okay? So I feel I should not enter in the trade. I may wait for further signal to enter in it. Now let's take a look at another examples. Okay, so it's how are we doing it with divergence? So there are different kind of divergence. So here you can see it's very regular bullish divergence. So means bullish divergence means in this shape. So when you use a trading system that anticipating a market move, chances that you may not be wrong or right, but you cannot be right at all the time. As you know, the market is irrational. Therefore, there are times when you right on the money, but there are many times that you need to prove, there are also times it's wrong. Okay, so this is a very regular bullish divergence. And if you're following this, okay, so if you're following this trend, okay, actually this price maybe go up because it's on a bullish divergence. And same for here. This one is a bearish divergence. So a regular bearish divergence is the line we draw it on top of the candlestick, and the line we draw it on top of the red line. Okay, we only draw the divergence by the red line, means we follow this shape. Why we only draw this one? Because the other three lines is very smooth. So now let's take a look at TDI with Ichimoku cloud. So Ichimoku cloud is another indicator for us to identify is that a bullish or bearish market. So let's just do a quick recap. When the price moving below the cloud, something like this, you see this is a price movement and this is a cloud. So means what? This is a bearish market. So when the price, imagine, is moving here, so it's a bullish market. Okay, so because we are using all the cross together with Ichimoku, that's why it can give us a better signal for us whether it's a bullish or bearish. Should we enter in the trade? Okay, so let's just take a quick examples. So maybe let's take a look at this one. The green line. Okay, so even though the price now is below Ichimoku, okay, and you can see some is within Ichimoku. But if I really want to anticipate the market, or I really want to enter in the trade, you can see here, the green line is crossing the red line from below, so giving us the indicator to buy. Okay, so you can see here, even though the price is below Ichimoku, but I still can take a little profit towards a price of 1660. Okay, oh, we may also look at here. The green line. Okay, so now let's look at here. So the green line is crossing the red line from below. So actually this one giving us the signal to buy it, right? But now I feel, okay, so it's at here, okay, the price is within Ichimoku. So I don't like to trade when the price within Ichimoku. So I may just wait it, but I may just hold it until further signal for me. So that is how we are using Ichimoku, okay, to help us to enter in the trade. It's like sometimes it's very good for us to enter in the trade. It's add on more confluence. Sometimes it's no, I mean the Ichimoku cloud maybe show you to short it, but the signal for you is to buy it. So maybe you should hold it until further signal. Okay, so now I may end today's webinar, and thank you for your attending. Thank you, everyone.